Okay, welcome back everybody. I'm going to do my first video on euro dollar, um, euro versus US dollar, which is a currency that I'm going to backtest for the next 6 months in order to backtest and analyze and do chart hours in order for from February, more or less, to start trading it as a scalping. Um, Doing my London session, of course, also New York sessions um, on a daily basis. I'm going to tell you why. I'm going to thought about also adding now the another pair, but also why I want to include it in my park of pairs. So let me just move a little bit. Okay, there you go. So first reason is why not? Why shouldn't I include another pair into my arsenal uh, if my goal is to become a full-time forex trader? Why not? It's just more things. Yes, it's more work to do, but is if I want to become an analyst, I can't just stick on one pair, and it's better always having the more information I have, the better it is. The more chart hours I have, the better it is. The more recaps, daily analysis, daily price action analysis, and backtesting I do, the better it is for me. Even if I end up not trading that pair, like for example Bitcoin, where now I'm not trading it anymore because for scalping purposes, at the stage that I am as a trader, is not good. I don't have enough capital. I don't have enough knowledge to actually trade it as a scalper. Maybe when I will become more of intraday and I will include intraday trades, then it will be possible. For now, only gold for the first 6 months. So why not? It's okay. So second reason, uh, what do I have in my arsenal? We have gold, wallet equals safe haven versus USD. It's not safe haven versus metal, which is used against inflation, against the devaluation of the currency, against used for uncertainty, fear, uncertainty, and doubts, war tensions, trade wars, anything that is correlated to a negative outlook of the economy on the worldwide, on the world outlook, macroeconomic outlook, versus US dollar, which usually is also used as a safe haven currency, but is in this case it is more of the risk currency. If the currency US dollar gets deflated, then gold is more bullish. If the opposite happens, then gold is sold because there's no need. Investors don't want to put money into gold if it's not if they are more willing to risk on the markets. The second pair is Bitcoin USD, which is crypto and is asset. Is an investing asset. Is something new. Is very volume rich. Has a huge market cap. So it's a very different from gold. And then USD is a risk currency against safe haven. This is very different. It's not trading euro dollar like trading gold against dollar, because euro is the risk currency where investors put money when they are more willing to risk, as I said before, versus USD, which is a world reserve currency. That of course is where investors, if they have to put money in currency investments into a currency in some special situations, like fear, uncertainty, and doubt, war, tension, trade wars, etc. They're going to put it in dollar, yen, Swiss franc, and in this case, euro is when I see that the markets are more optimistic. So the stock market are booming, and gold is bearish. Then that means that also might be that euro, like GBP, can be bullish. It would be very interesting to include because, of course, you might think, okay, so the dollar is increasing in value, so euro dollar it's against the gold, so euro dollar should be bearish, but maybe not, because against the gold, as I told you, dollar is sort of the risk currency, while against the euro is the safe haven currency. 3. I trade, as my trading plan, 3 London sessions and 2 New York sessions per week. Doing London session is gold, Bitcoin, they don't move that much. Gold moves indeed, can take some interesting scalps, and I will during these 6 months. But euro is the best because I will be trading from 8 a.m., which is Eurozone open, till 10, 11 a.m., which is the full London session, 2 to 3 hours of London session, where euro is very active, and also sometimes 2 days per week I will trade New York, where of course I will trade mainly gold, but also euro is very, very good in that situation. Both volume and liquidity very high, is I think the most traded pair, and for the same reason, which you can put like 4B, spread is 0.0. So almost any time of the day, spread is 0, and the commissions lower than gold. This is very, very important as a scalper, because I find it myself on gold, especially on Bitcoin, but gold sort of, apart from New York or some very, very liquid hours, the spread is 1-2 pips, while on euro dollar, the spread is always 0. Of course, the moves, intraday moves, since it's a currency, are not 30, 40, 50, 100 pips easy. That's something that happens on gold, on Bitcoin, which are not currencies. But maybe I will show you later, but I can place a stop loss of 3 pips, 4 pips, and try to target 10, 15, trying to extend to 20 pips, which is a very, very good risk-reward ratio, and is very, very less stressful, much, much less stressful for me to just have a spread of 0 and not having the spikes that happen on Bitcoin. I don't remember if I have any other reason that I forgot. Spread, London session, I think that's it. And okay, so we can start our we can start our higher time frame webinar and starting to have a look at how it works. Okay, so let's start here. Okay, on the monthly time frame, so we start from 2002, the year where it became public, we can say. If we have to see the structure, we saw bullish, very, very bullish, with creating higher highs, higher lows. reacting at this previous price sensitivity area on the left hand side, the last high, and then continuation up, reacting here, this previous highs, and then going to the all-time highs at almost 1.6. Double top being created here, and then very, very, very strong bearish impulse, which happened exactly in 2008, 2009, which you know is a financial crisis. And that's why I told you that euro dollar, the dollar, you see, gold was very, very bullish during this crisis because people, investors who were risk averse, went to buy gold against the dollar. In this pair, as you can see, investors sold their risk currency, which was euro, to buy more dollars, which being the world reserve currency, acted and acts even today as a safe haven because it's the currency that being used for almost all the invoices of almost for everything, like 80% of the transactions. It is very, very safe. I mean, it's not something that it can be devalued very easily and fast without any reasons. Then we see, so we're coming from all-time high. Then we see a lower high being created here. Another bearish. We are still in this financial crisis period. We react exactly at the same lows. Exactly. We bounce back up, create a new lower high, back down. We fail to make a new low. We create a lower high, and then we broke below this previous low of 1.1819 ish. We jump, break a retest. We create another block here at almost 1.0. We broke above, retesting sort of the bearish trend. Very low, nothing happens. Not big ranges in the last years. This probably was COVID 2019 reaction at these previous lows, previous price sensitivity area, bounce back up, and then we are here reacting at these previous lows on the left hand side. So as you can see, we have most recently, after in 2021, we're coming from a bullish run. Our last make or break price sensitivity area is around 1.15, 1.16.5, which was also reaction of these previous lows on the left hand side. Close the reaction here, and we can of course break below a retest if the dollar gets more value from interest rate hikes, tapering talks, and all that is bearish for gold is bearish also for euro. Or maybe we can, if the Fed talks are delaying the interest rates and the tapering, and we see break above these candle bodies, but mainly above these bodies, and we have break and retest, then we can have a bullish impulsive on the upside. The basics are the same that from gold because it's against the dollar. So the value of gold, of the dollar, the fundamental reasons are the same. So tapering, interest rate hikes, supply, demand, etc., etc. So as you can see, as I was showing you, coming from this impulsive break below, we had some retest, fade to make new highs, continuation down, coming towards 2019, clear bearish trend, as you can see, lower high, lower lows, lower high, lower lows, 2020. Here, as you can see, at the start, when we had the coronavirus, we got this big impulsive bearish here move, which was explained because of US dollar being safe haven, ranging almost 1.8, 1.7 lows, and then we saw breakout, retest of this price sensitivity area. This was a fake out because it was very impulsive due to the coronavirus, but we see retest of these previous highs, even on the daily time frame, and then continuation up, break above this price sensitivity area here, another block being created. We can call it a double bottom if we want to be clear. Or the block, break below. And with all the optimism coming from the vaccine, all the optimism that brought gold from the all-time highs to these lows where it's now, 1700, we got a double bottom and then optimism in the markets. So no need with the vaccine roll out, no need of the safe haven. We can risk it. We have a retest and sort of this positive area, and then we are just ranging, reacting at these previous lows, reacting at these previous highs, and that's why I told you, yes, we have to see. This is mostly coming from exactly the same reason why gold is very bearish. Is because of the talks about the inflation, so the revaluation of dollar from tapering, from interest rates. We are almost at these lows, and we can consider sort of long-term sells below these lows, as I was showing you, to revisit at least this price sensitivity area on the left-hand side. But if we break it below, of course, considering to go revisit almost 1 point flat. Otherwise, if we see delayed talks about the tapering and the interest rate, we can see some break and on the upside. This is because not like gold, the talks about inflation or blah, blah, it's about the risk aversion of the markets. So it's very different, and it's something that I had to myself learn and try to get used to it. Very good. Let's move on a lower time frame. Let's go on the 4-hour time frame. I don't think we'll see anything much different because of what we are seeing already. As you can see, these are the same actions that we saw on the daily time frame. As you can see, these lows, we got a double bottom, retest, continuation up. This is just the last price area, but as you can see, served as a very price sensitivity area on the previous daily and 4-hour time frame candles, so that's very useful right now here, exactly as you can see. And also on the right hand side you see that price reacted many times at this price point, exactly. Stay there. Okay, these previous highs around 1.23. As you can see, 23.50, these are 50 pips, but it takes a lot to move 50 pips. 100 pips is not like gold or other assets or stock market. We got a reaction, deeper, little bit, little deeper dip, but then price April 2021 with the devaluation of dollar and the risk, more willingness to risk from investors, we saw this bullish uptrend. This was the same of the uptrend on gold. And then we're starting to see talks about tapering interest rates and the revaluation of dollar. So also on the 4-hour time frame, as you can see, we have these price points. We can have break, retest, go below, break, retest, break, retest. And remember that currency don't move fast like gold. Or we can have here, break, retest this area, continuation up, break and retest of these previous highs on the left for continuation up, with of course the fundamental reasons of dollar strength and dollar weakness that we know already. So this is it for euro dollar. This was just a first look of it, and that's it. There are no key levels, nothing yet. I have them, but I have to put them. So this is it. See you guys.